everyone. Thanks so much for joining us today. My name is Kaitlin Thompson. I'm the VP of Product Strategy here at Evolve ETFs, and I'm joined today by Megan France, who is the Director of ETF Business Development at CIBC Capital Markets. And we brought her on today to give us an update on the ETF landscape. So Megan, thank you so much for joining us today.
Hi, Kaitlin. Thanks so much for having me.
Why don't we jump right in? We got a few questions that we want to cover off in this short session. The first one being, if you can give us a bit of a mid-year recap on the Canadian ETF market.
Yeah, absolutely. So I'll take a look at what we've been seeing in Canada for the ETF space, both this year, and then I'll compare it a bit to 2021 as well, especially in the first half of the year. So starting with last year, it was a record year for the ETF space, both in terms of inflows and also for product launches. So really fantastic year in 2021, brought in about 56 billion in inflows. We saw 27 billion of that coming from the first half of the year. So that gives you a little bit of a mark compared to where we are right now. We also did see great launches, new products, very innovative products, and a lot of first of their kind type of products. I think Evolve might know something about that.
They're first of their kind, so.
Right. Always exciting. So there were over 200 new ETFs launched in Canada last year. About 110 of those took place in the first half of the year. I would say things have slowed down a bit from that record year from what we're seeing this year. So in the first half of the year, we've taken in about 20 billion in net inflows, meaning a run rate of about 40 billion for the year. Those numbers are a bit more in line with what we saw in 2020. Now, I don't think that's anything to be concerned of or anything. I do think the ETF market space is still very strong this year. Just a bit of a slowdown and more in line with where we were initially. And I think some of that is probably due to the volatility and uncertainty we're seeing. Now, we are still seeing really strong product launches and even new entrants into the ETF space with new issuers. So about 90 new ETFs launched so far this year. We're specifically seeing those in areas like thematic ETFs, ESG, and also mixed asset ETF portfolios. So still some good product launches. Flip side, we have seen about 27 ETFs closed this year. So pretty in line still with what we saw in 2021, not too much of a pullback there when it comes to new launches. And exciting, as I said, 2 new ETF issuers this year. So that brings us to 42 ETF issuers in Canada. One other change that I would say is a bit different from 2021 is mutual funds had a very strong selling year in 2021, where we're seeing a bit of a reversal this year. So ETFs are pretty strongly outselling mutual funds in the first half of the year here. Net sales for mutual funds as of the end of May was around 7 billion, whereas ETFs almost tripled that number. So a bit of a reversal there this year. And while I do think flows are still pretty good, I think we're going to see a pretty good year. We are seeing the market downturn take effect a bit in the ETF space. So that drove net assets down about 8% compared to 2021, but hoping for a good, strong finish for the rest of the year here.
Awesome. That was a great overview. It's good. It's good to hear how many inflow or how strong the ETF market is still done despite all the volatility, and really interesting that reversal from kind of mutual flows to switching to ETF flows. So thanks. That was a great update.
Yeah, absolutely.
So then my next question was around some of the biggest trends that you've seen so far this year. I think a lot of advisors and investors are kind of a little bit panicked. Nothing seems to be working right now in these markets. So from a flow standpoint, can you give some insight in terms of trends that you've seen?
Yeah, I would be happy to. So as I mentioned, flows in the Canadian space have slowed down a bit this year compared to last year. The US is really seeing the same story where the run rate is about 40% below last year's. But as I mentioned, last year was really record flows, both in US and Canada. So US took in about 900 billion in inflows. This far surpassed any other year. So a bit slower in terms of flows for the year. A more general trend standpoint on the equity side of things, we're seeing most of the flows go to broad market equity ETFs. That's getting about 65% of the net flows. That's pretty standard. I wouldn't say that's out of the ordinary. That's typically where the majority of flows we would be seeing. Also this year, for actively managed equity ETFs, the net inflows are actually trending upwards, specifically around some dividend-oriented products, sustainable investing, and also covered calls. I would say, I think that is a product of the environment we're in. As you mentioned, it is a tough environment. Dividend-oriented products have done fairly well. I'd say they're back in favor after not really being for the past few years. So I do think that's something maybe we'll continue to see in the near term here.
Yeah, we've got a suite of covered call ETFs, as I know you're familiar with, and we've
absolutely
an interest in them because we have clients that are looking new places to get yield for their portfolio. And in a kind of 10-year secular bull market we had seen, a covered call strategy obviously forces you to sell a little bit of that upside. But year to date, now that markets have been volatile, kind of trending sideways and down, it's a great environment to start allocating to these covered call strategies. So we've definitely seen some of those inflows as well.
Yeah, that's exactly it. And we do think it's a great space to be right now as well. Then from a sector perspective, we're seeing a lot of...
You took the words out of my mouth.
Oh, good. Wow. Yeah, from a sector perspective, we're seeing a lot of the inflows go to financials, energy, healthcare, and thematic ETFs. So as I mentioned, that's a lot of the space that's being launched as well. And I would say something that Evolve does very well. So we're seeing a lot of flows go there. On the flip side, we're seeing some of the outflows from precious metals, real estate, and also tech. Once again, kind of a product of the environment. Tech has been pretty beaten up this year.
Yeah. And to the point of the inflows, as you mentioned, some of the sectors that have been getting a lot of the inflows, financials, we do have a couple products there. We've got an ETF, call is US banks as well. And then also healthcare, as you mentioned, another great sector that has really held up very well in year to date, especially since a lot of people view healthcare as kind of a bit recessionary resilient.
Right, absolutely.
So we've definitely been seeing flows into that sector as well.
Yeah, so then on the fixed income side of things, it's definitely been a challenging year for fixed income. We are seeing some moderate inflows into aggregate bond ETFs. And then something a little bit different this year, we're seeing kind of that flight to safety trade. So a lot of money going towards money market products, high interest savings ETFs. That's taken in over $2 billion in net flows so far this year. We actually think the high interest savings ETFs are going to continue to get a lot of interest. It's a great space. Jin Yan from our research team just published a really in-depth piece, a fantastic piece that goes over some of the main points of these high interest savings ETFs, what's available in the Canadian marketplace, and how they differ from money market funds. So she noted a few of the benefits of the products. They'll benefit from rising rates. They typically will deliver consistent positive returns with minimal volatility. And then they have also delivered better returns versus their money market mutual fund counterparts over the past. So I definitely would say if that's an area of interest, check out her report. She really dives deeply into, as I said, some of the benefits, some differences, and then also just what's available in Canada.
Yeah. And you touched on a final one of our top selling products right now, our HISA ETF. A lot of advisors are going to cash because we're, again, kind of waiting for the dust to settle and not exactly sure what's going to come out on top. So what better way to park your cash in a zero duration, safe product, while collecting kind of the overnight rate plus a spread. So our HISA ETF's yielding close to 2%,
which is fantastic.
Which is really great for just putting your money in cash and having that, as you mentioned, kind of that daily liquid option for when you are ready to allocate to a sector. And we think we've kind of found some stability in the market. So yeah,
absolutely. And then just one other quick note from a trend standpoint, which you guys are the experts here, but for crypto. So last year, it was one of the most popular topics, getting tons of flows, new products launched. It actually took in about 10% of all the flows in 2021. So very popular space to be. Now we have seen that completely stalled out this year. It's closer to, so last year was about 6 billion, closer to about 150 million so far this year. I do think it's an interesting area still. I think it's something we'll just have to continue to monitor and see how things play out after some of the turmoil that we're experiencing this year.
Yeah, the crypto market has definitely taken it a little bit on the chin recently with just general market volatility and then some more specific crypto headlines as well. But there's definitely been some large outflows, I believe, but there's also been some equally large inflows. So there's definitely lots of trading in the crypto products. So it'll be interesting to see, kind of zoom out a couple years from now. We think they'll be relevant and they'll be bigger and crypto markets will go up. But an interesting thing to watch for sure.
Yeah, absolutely.
Awesome. Well,
continue. So one last thing I'll mention in terms of trends, and this is from a more general standpoint, is the institutional usage of ETFs. So we took a look at how mutual funds are increasingly using ETFs as building blocks in their portfolios. So looking back to 2017, ETFs held by mutual funds was at about 30 billion. And then fast forward to the end of last year, that number has increased to over 100 billion. So a lot more usage coming from the institutional side of things for ETFs, and also really positive numbers and how that's trending with Canadian listed ETFs specifically. So in 2017, that number would have been about 60% of the assets held were Canadian listed. That number is up to 75% now at the end of 2021. So a really positive message for the Canadian ETF marketplace, and also just the product offering available here in Canada is fantastic, and institutions are definitely taking note. So that's another thing that we did publish a full research report on. So if it is of interest, we dive in deep into where those are being used and also the most widely used ETFs by institutions.
Wow, I didn't realize it was that high.
Yeah.
So I assume most of it would be kind of broad market, broad beta type products that would be that a lot of these funds would be using.
Yeah, it's a variety, but that's going to take a lot of it. Yep.
My last question for you is, what kind of sectors or industries do you think investors should be looking at moving forward?
Yeah, it's a great question, especially right now. We're definitely in a bit of a challenging environment and a changing environment from what we've seen over the past few years, but I think there's definitely a lot of areas of good opportunity. So as I mentioned, I think we'll continue seeing flows to those dividend-paying equity ETFs, and also for sure the high interest savings product like your HISA ETF. But looking a bit further out, I really like some of the areas where I think we'll be able to continue seeing innovation, and also those areas that make sense during really any part of the economic cycle. So healthcare, which we briefly mentioned, has definitely been on the front of everyone's mind over the past few years. We've gotten to see a lot of innovation come through that space. And I think we'll continue to see a lot of interest grow in the coming few months here. So something like your global healthcare enhanced yield ETF makes a lot of sense to me. So life is something to definitely check out. I think it'll continue to do well and just see more innovation as time goes. And then another area that's becoming, it's seemingly more and more important, is cybersecurity. So companies are investing so much to ensure safety, and I think we'll get to see a lot of interest there and a lot of innovation coming from the space. So I think cyber is another ETF to just keep an eye on, and great opportunity moving forward.
Yeah, no, it's a great sector, because it's one of those that we've talked about it before as kind of the utilities of the technology sector, because It is non-discretionary spend. Companies have no choice but to spend on their cybersecurity, and there is an extreme shortage right now in cybersecurity skills. So a lot of companies have these big cybersecurity budgets, but not the resources to be able to actually implement them, which means they have to outsource so much of their cybersecurity, which kind of directly makes these cybersecurity companies the beneficiaries of that. So
yeah, absolutely. I think it'll be a great space moving forward.
And then even with all the talks of recession or not, companies will still need to be purchasing cybersecurity. So.
Exactly.
Awesome. Well, thank you so much, Megan, for joining. We really appreciate all of your insights. Please check out the CIBC ETF Research Desk. So she's mentioned a couple of the reports that they produce, but they're great. They're really detailed and extremely insightful. So they're great things to watch out for.
Thanks so much, Kaitlin.
Thanks. Bye.
Bye-bye.